Good morning, everybody. It's Thursday, February 13th, and we're going to start our prep for the ES today. Were you ready for the down move on CPI to the last bid by market makers? Or are you still watching the market tick by tick and bar by bar to find bids and offers? Do you understand who is in the market creating the price action that takes your money? Let's review what happened yesterday and get you ready for today. First, just a quick reminder, as always, that derivatives trading is inherently risky and past performance is not indicative of future returns. So yesterday in our video, we laid out that traders were underinsured for CPI, which either meant they didn't care or could be caught off guard. And that's exactly what happened. We saw the down move that opens the door for the down move. When the storm is coming and people aren't insured, the damage can actually be destructive. And we came right down to where we had our last bid that's still here today. It's only about a $500 million, but right here you can see it on right here between this 60, 24, and 30 area. And that's exactly where we came down to yesterday. And we started to build out size. That's where the market makers had money that we knew they would deploy. And then we just saw our washing machine again. We made a push up. Then as people were concerned about Powell speaking, then they began to buy insurance. So we can show you at 8 a.m. We weren't in the red. We weren't way up here or higher for CPI. So that opens the door for the downside. Then, as we came into 10 o'clock, everybody's now concerned. Nobody cared earlier. Now all of a sudden, everybody cares. Once all that buying is done and we see that happen, that demand for the insurance is done, then the insurance providers in the market move the market higher to limit their losses and actually make money. So this was at 10 o'clock, and then by 11, you can see that this dropped drastically. Now it's still in the red. What does that tell us? That the move down, so this is at 11, and let's go back to our chart here. At 11 o'clock, we see that a lot of this has come off the table as people now realize, okay, Powell's not saying anything too important. We start to come down again, and we can monitor this every minute, every 5 minutes, any duration that we want, and we can see that it starts to pick back up. And we had that play out at 11:30. We saw a large spike in our model, and it went from that red level all the way back up to about where it was ahead of Powell speaking, which tells us again that traders on that down move, in this move here, are beginning to buy more and more insurance in the market because they are concerned because at 1 o'clock, we had the 10-year, which we told you about, that is going to be important and impactful. So at 11:30, we get that insurance buying. So this is that down move into the insurance buying at 11:30. Once we hit that level again, and we know that the demand for that insurance is done, then we made our big push back up again. And all we did was by 12:30, now we're below the red and that's done. So now everybody has lost money on their insurance. Now they're not concerned. They can close out all those policies. And then the market, just rotated. These were the easiest moves in the day yesterday. These are the easiest ways to follow billions of dollars that protect the trillions of dollars in the market so that we can understand who's in the market, when, where, and why. And so as we come into today, our systematics are not really participants again. They likely won't be participants again until next Thursday is when we see a large bid return from them. So they are likely going to be either resistance or non-participants every day between now and next Thursday. So we have a week of this. From our market maker standpoint, we are right at the line in the sand. You can see where we are just stuck between our different durations, but our lower line in the sand and our upper line in the sand now in this whole move. And in terms of edges, it's way up at 61.44, which is our top edge today, by the way, at 49, so just inside of here, and then down at 59.80. So they have plenty of capital or supply. They are neutral here. They have about as much capital and product contracts on both sides. They are neutral. If we look at what the structure tells us, 24 to 29 is our last bid, and our last real offer of significance is at 6104 to 6109, which is right in our upper rotational zone today. So those are going to be the areas to watch in terms of where these bids and offers are from a much larger participant. And we can see that these positions here at the 6120 and 6019, these are about $6 billion. So to put this in context, it's always a sliding scale, but we can monitor the actual cash value and then how much money is tied to that in terms of notional value for these moves. So for today, we will look for rotational price action 6048 to 6108. Our upper target is 6149 and our lower is 6005. And then we can look at our weekly plan. If you go back to our weekly video from this past week, we will be diving into some other factors for next week on the weekend video and look back over the last few months, taking a very longer term view of the market. And we will dive into some of the positioning that happens around November 5th and 6th and how that plays out and look back historically over the last 40, 50, 60 years as well at how that's played out. And so for today, we don't have a lot of insurance ahead of PPI, but PPI is not always as important as CPI. So that tells us that it's likely either to be a muted response or downside. We don't have that positioning, just like we saw yesterday multiple times, that says that significant upside is coming. We don't have this. We're down in here for PPI now this morning. And so these create that big up move. When we don't have that, we're looking more neutral to downside on the reaction for the data. It's not really going to matter what the response is because people already know this information and are positioned ahead of time. All we are going to do is piggyback off the billions of dollars in the market because we can't move the market ourselves as retail traders. So be sure to protect your risk. And if you are interested in having access to these proprietary tools at 5 minute or 1 minute intervals throughout the day to level up your trading and also to learn how to read the market properly and how to have a good understanding to go anywhere. We don't just do the ES, we do every other instrument, but we won't give out all of that information unless you actually go through the courses and learn how to read the markets overall. We will go through those on the weekends. But if you're ready to level up your game, check out our website for our upcoming courses that begin in March. Have a great day, everybody, and stay safe trading out there.